Today, let's talk about the tech shares crash and the looming US recession rattling global markets. Yesterday, stock markets in Europe, Asia and New York took a nosedive. The fear of a US economic slump is growing, and tech shares are taking a serious hit due to underwhelming earnings. This global sell-off picked up speed after a disappointing US jobs report showed the employment market cooling fast, pushing the unemployment rate higher. Economists are now worried that the US economy might be weaker than the Federal Reserve anticipated. This could force the Fed into a sharp cut in borrowing costs in September or even sooner to try and stimulate demand. Stephen Brown, the Deputy Chief North America economist at Capital Economics, believes an interest rate cut in September is inevitable, with even a 50 basis point cut on the table. Adding to the anxiety, we had weak data from the US manufacturing sector and disappointing results from semiconductor giant Intel. The Nasdaq index fell nearly 3% in early trading, heading for a correction after the latest non-farm payroll report showed only 114,000 jobs were created last month, much lower than the 175,000 expected. The unemployment rate also rose from 4.1% to 4.3%. Japanese equities suffered their worst day since the 2020 pandemic. The Nikkei 225 dropped by 5.8%, and the broader Topix fell by 6.1%. Australia's ASX fell 2.5%, and Hong Kong's Hang Seng was down 2.1%. Europe didn't escape the carnage either. Tech stocks hit their lowest level in over 6 months. France's CAC 40 dropped over 1%, Germany's DAX lost 2%, and Dutch chip-making equipment manufacturer ASML's shares plummeted by 9.6%. ASM International fell by a staggering 13.7%. Jim Reed, an analyst at Deutsche Bank, noted that the past 24 hours have created an increasingly precarious backdrop for risk markets, driven by weak US data and downbeat tech earnings. The UK's FTSE 100 wasn't spared either, losing over 120 points at one stage, down 1.5%. This followed a rough day on Wall Street, where the Dow Jones fell 1.2%, almost 500 points. Manufacturing activity in the US dropped to an 8-month low in July, and new applications for unemployment benefits reached an 11-month high. New orders for US manufactured goods fell by 3.3% in June, adding to fears of declining economic demand. The Fed hinted at a rate cut soon. Financial markets are now pricing in a 100% chance of a rate cut in September, with a large half-point cut seen as highly likely. The US dollar weakened, while safe haven assets like gold hit a fresh record. Gold futures surged to $2,506.40 an ounce. Intel's shares plunged over 28% after announcing plans to cut more than 15,000 jobs globally. Amazon's shares were down 10% after missing sales forecasts. Nvidia's shares fell 2.7% amid a DOJ investigation into potential market dominance abuse. Russ Mould, an investment director at A.J. Bell, summed it up. Rising economic pessimism is casting a shadow over global stock markets. As central banks gear up to cut rates, the focus is on preventing a recession. But for now, it's clear global markets are on edge. Stay tuned for more updates and keep an eye on those portfolios. Thanks for watching and see you next time.